Welcome once again to Prices at the Pumps. I'm Scott Squires, pleased to be joined by energy expert Dan McTeague. Dan, it's Wednesday again, so let's get right after it. We'll start off with where you're seeing prices at the pumps heading in this region over the next day or two.
It looks like we're going to get a break finally, Scott. We've had 2 weeks of increase, one because markets moved up in response to OPEC's cutback, additional cutback of 1.2 million barrels. But we've also seen nervousness, extreme nervousness by markets, still concerned that every time there's a threat of an interest rate increase in the United States, that somehow this is going to bring the economy to a crashing halt and demand to a standstill. That's not true. It never will be true. It certainly wasn't true in the past, and it's not likely to bear out. But it does mean in short term, nervousness by energy traders, and they're really not physical energy traders. These are the people that play algorithms and have little programs in their computers. And, when they see a headline, they get all nervous. That's not the real market. And so for that reason, you and I are going to have a small benefit, at least us in Atlantic Canada. We'll see about a 2 cent a liter decrease for gasoline, a 3 cent decrease for diesel. And if you happen to be using furnace, stove, heating oil, look for about a decrease of some 6 cents a liter. So a little bit of a reprieve. Thankfully, nervousness by markets means slight benefits for consumers.
And Dan, you mentioned, interest rates and other things that can have an effect on the energy markets. You and I were talking, it was either last week or the week before, about potentially where the rate of inflation was going to go. And you kind of laid out your reasoning why you felt that the next time inflationary numbers were released, we would see a drop. And just the other day, the inflation rate in Canada was shown to be slowing somewhat to around 4.5, 4.6%. And I know that you have some thoughts on why that is and where it may be headed even next month into May.
Scott, I'm glad I was able to talk here on SaltWire Network about predictions, not just for energy, but also for inflation. There is a correlation between gas, diesel, energy prices, and inflation and the cost of living, a massive one, much bigger than I think any economist wants to consider. Perhaps I should spend a bit more time, digging a little deeper on that, because every time prices go up for energy, they tend to have a rippling effect right across the economy. The same is true of the information on inflation. I figured we'd be down about 1%. We were down 0.9, not bad. I think that May and June's numbers are going to be even better as far as the inflationary headline number, because if we compare to where prices were moving up, in April, May, and June of last year, it's likely that at least by June, we could see another 1.5% drop in the inflation rate. So down to 2.83%. Mark my words on that one, because gasoline prices have everything to do with the cost of living. And it's why I get a little upset, and you can see that when it comes to governments finding cute, trendy, not so bright ways to raise the price of fuel, especially with carbon taxes, making life much more difficult for every Canadian, and of course, other consequential effects, food prices and higher interest rates.
Dan, something else that we talk about, and you specifically mentioned, is the effect that the Canadian dollar versus the US dollar can have on Canadian consumers. And we were just checking earlier before we came on to record this. Looks like at least this morning, the Canadian dollar taking a bit of a dip. What kind of effect does the value of the Canadian dollar versus the US dollar have on energy prices and the Canadian consumer in general?
Yeah, and energy prices, they're actually linked to, joined at the hip, as they say. Whatever the value of the Canadian dollar is, so if it happens to be 134, 135 pennies to buy US dollar, it means the price of gasoline, all of our commodities are priced in US terms. They're traded on the US market. In the case of gasoline, that's an additional 25, 26 cents a liter plus HST. So 15%, so almost 30 cents a liter. That applies to every single commodity that we consume in this country. So the value of the Canadian dollar is extraordinarily important in terms of inflation, in terms of our purchase power, in terms of our ability to make ends meet. And so looking more deeply into why the Canadian dollar is so weak, when in fact in the past we had the advantage, the shield, if you will, of the petrodollar, where oil went up, so did the value of the Canadian dollar. We didn't quite feel it, but we are feeling it now, and it comes out to 20, 25, 30 cents a liter on fuel alone. You can imagine what it's doing to other commodities, lumber, mining products, food, imported food. All of these things are very much conditional upon the strength or weakness of the Canadian dollar. It happens to be chronically weak, and it's one of the main reasons why I think Canadians are really having a tough go of it, and many and more seem to be struggling with the cost of living, made in many respects by the fact that Canada doesn't have a lot of stuff that the world is interested in trading. Mind you, there's a lot of money for subsidies to attract new technologies that still have a long way to be proven.
This next question, I know, certainly doesn't have an easy and a simple answer, but for someone like yourself that spent 18 years in the House of Commons as a member of Parliament, I'll ask it. As we see fuel prices kind of up and down and all over the place, and what's happening with interest rates and inflation, and we talked just now about the Canadian dollar and the value of it, what do you see as some steps that government could take to mitigate some of these things that are happening with fuel prices and other things, and basically help the Canadian consumer?
Well, I think the Canadian government could help itself in achieving many more of its goals if it were to do what Europe and other parts of the world are doing, saying natural gas is not a bad thing. Let's get more of it to markets globally. Let's build pipelines to do that. At the same time, I think we have to recognize that decisions made in the United States, not just in terms of energy markets, but things like the US Fed. If Jerome Powell, the chair, decides next month no more increases in interest rates, energy prices are going to go through the roof. Oil, I expect, would go up $15 a barrel from 78, 79, 80, where it is today, to 95. That's for West Texas Intermediate. Brent would be about $2 or $3, maybe $4 more a barrel. Whatever decision is made, Canada can control its destiny if it has the ability to sell that which the world wants more of. And, it's not me saying this. It's not oil companies, who I don't like, and they don't like me saying this. It is, in fact, Japan. It is, in fact, Germany. Countries whose heads of state and leaders have come to Canada saying, please give us some more of your oil and gas. We need more LNG. And we say, sorry, there's no business case for it. And Canadians are losing a tremendous opportunity. And for a long time, my plea has been ignored. No longer. When 50% of Canadians are having a tough go of making ends meet and their food banks are overflowing with people who are desperate, I think it's time for our political leaders and policymakers to clue in that these policies that they are advocating have no other benefit than to hurt Canadians. And don't take my word for it again. Even our emissions are rising, despite all of the pain we're inflicting on people with these ridiculous, nonsensical first carbon tax, second carbon tax coming July the 1st, and other emissions caps, which do nothing more than frustrate the one country in the world whose environmental, social, and governance mandates on a barrel of oil are the highest. We rank the highest in the world. There is no country that comes near us. So if Canadians want to continue to ignore these facts, they do so at their peril. Unfortunately, I think most Canadians can afford to continue to be ignorant.
Dan, we know that you speak to a lot of other media outlets and individuals and groups and right across the board that want to be able to kind of pick your brain and get an idea of where you think things are going or what things can be done to mitigate some of the things that are going on that are affecting energy prices and so on. But if you kind of took an average of everyone that you speak with on a weekly basis, what's kind of the common question, the thing that people want to know most, that they want to know from you the most in terms of energy prices? What's that one common thing?
How do we get these prices back down? And why does a country blessed with an abundance of energy seem to be hurting itself? And I think there are some not easy answers to that. They're political answers. But the origins and the source is that we have many political leaders and parties committed to raising the cost of energy as a means of achieving a climate goal. As noble as that sounds, it's unrealistic. It's impractical. And I think we have to go back to the drawing board and maybe start with eliminating the carbon tax and starting to look at other ways in which to incentivize the very kinds of outcomes that you want. If you want a reduction in emissions, obviously emissions are rising and you're increasing the burden on Canadians. Something is going to have to give because it's not working. I tend to be pragmatic about this. If we have to go that route, if that's the route people want to take, this is not the way to go about it. I think we have to choose a different path.
Dan, something else that I get asked quite a bit from family, friends, colleagues, et cetera, is, yes, we know Canada's a big country geographically, right from coast to coast. It's massive. But I get asked all the time, why is gas this price in Toronto or Vancouver or Calgary or St. John's or Prince Edward Island or Newfoundland, Labrador, Nova Scotia. Why are there some big swings sometimes where you might see Vancouver, they're paying maybe 20 to 30 cents a liter more than we are here in Halifax and Nova Scotia? Is there an easy answer as to why there's that big discrepancy?
Well, there are three markets in the United States that directly influence Canada. You'd have to break it up into three zones. You mentioned Vancouver, Vancouver Island, the Lower Mainland are influenced by what happens in the U.S. Pacific Northwest. They trade product between each other. And of course, the refinery there is so small it can't accommodate or supply the needs of that region. So other than importing it through the existing clogged Trans Mountain pipeline, the existing one that's had no issue since 1953 from Alberta, they're really at the mercy of that market. The rest of Western Canada, and that's from Thunder Bay all the way out to, if you call it the Lower Mainland, BC, is influenced by the Chicago spot market. So disruptions there will have an impact. And for good reason. You don't want Americans coming north buying our cheap gasoline and leaving us with none, because we have open trade agreements between the two countries. For Atlantic Canada, Quebec, and Ontario, we follow the NYMEX, the New York Mercantile Exchange. You'll see me refer to that on Twitter and things. The NYMEX is really the benchmark, the Bible for gas pricing all along the U.S. Eastern Seaboard, PAD 1, and Eastern Canada. And by the way, it's no small market. Collectively, if look at the U.S. Northeast and Canada, it is the largest consumer market for energy in the world. It's not somewhere in China. It's not California. It isn't, France or Germany or Britain. It's in fact the U.S. Northeast and Canada. And so that market really matters. And that's where the price discovery takes place. The only impact we have is being able to supply into that market, being able to supply enough for ourselves, and of course, a stronger Canadian dollar currency, which you and I just talked about.
What are some things that you're looking for in the next week or so to keep an eye on in terms of how they may affect the energy markets?
Yeah, well, look, by the way, tax differences between the provinces mean a lot. 5% GST in the West, 15% where you are, 13%. But what I'm looking for, I am waiting for only two matters. Right now, we have markets in panic mode. It's going to take a decision, a declaration at some point down the road by the U.S. Fed Chair, Jerome Powell. The moment he makes the declaration that there are no more interest rate increases, look for oil to skyrocket. Second, if there is no change and Powell continues this monetary hit on inflation in the United States, really suppressing the price of oil, or you have the Biden administration not wanting to refill the Strategic Petroleum Reserve and using it as a price control mechanism, I would expect OPEC not to just say we're dropping 2 million barrels in production a day, or what they did 2 weeks ago, which drove prices up 1.2 million. I think they'll add another 1.5 million if nothing happens by mid-June, at which point markets, traders, energy traders, those making the bets are going to have to really smarten up quickly, because the shortfall will be substantial. The world will be producing 97 million barrels, but the actual supply outlook or demand outlook is 102 million barrels a day. That means 5 million barrels can't be found anywhere. So I think there's going to be a wakening up period very quickly, which I think is going to either lead to extraordinarily high prices in a very short period of time, or a slower increase if cooler heads, smarter heads, and those really looking at fundamentals, supply and demand, start paying attention to the fact that we have a problem with oil and gas. And don't take any more evidence than the fact that just earlier this morning, the U.S. Department of Energy put out its weekly petroleum report. Oil inventories in the United States are down 4.6 million barrels in just 1 week. So we're heading towards that crunch, and that crunch is coming at a time in which no one's got alternative or spare barrels just sitting around.
Dan, that's why we appreciate having your expertise and your insights here each week on the SaltWire Network, just because there's always something to talk about. But when you're not with us here on SaltWire, where can folks find you, interact with you, and just get information from you?
Well, other than coming here in SaltWire, you'll find that a lot of what I'm saying here, I'll say later on in Canadians for Affordable Energy, my affordableenergy.ca site, or I might actually say on my gas wizard Twitter account, or you can look at Gas Price Wizard, which of course is the account that provides the heads up in terms of where prices are going. I haven't updated it sometimes because of the holidays and things like that, but those are the three means in which you can directly get a better idea where I'm at on any given day.
Appreciate that, Dan. And before I let you go, I feel I must ask, how goes the move? We're kind of giving the weekly update of the Dan McTeague move. How's it going?
It's going better. The Wi-Fi works. So yeah, not bad, and getting better. Just a lot of disruption, a lot of boxes still. Probably take me weeks to figure out where all this junk goes.
Well, listen, again, we appreciate you taking time out of your schedule to chat with us here on SaltWire. Enjoy the rest of your day. Have a great weekend, and we'll get together and do it again next week, Dan.
Always a pleasure. Thanks, Scott.
Indeed. Thank you, sir.